World Wrestling Entertainment and UFC owner Endeavor signed a definitive agreement to form a new publicly listed company with a value of over $21 billion. The deal for WWE and Endeavor announced this morning, and some of the details that were really outlined within this release as well. Endeavor is going to hold a 51% controlling interest in the new company, and then existing WWE shareholders, they're going to hold 49% interest in the new company. And then additionally here, just in terms of the distribution and reach, we do know about both of them being international brands. They will have quite the scale and omni-channel distribution that they've discussed as well. And at least as of last year, fiscal year end, they had both achieved revenue of about $2.4 billion and 10% annual revenue growth rate since 2019.
Yeah, just taking a look at this deal, I was looking at the share price right now. It's trading down to $85.50, and the contributing price, according there you can see on the Wi-Fi Interactive. I'll do some charting in a second. The number I was looking for, UFC and WWE, they're each going to contribute cash into this new company, so that holds about $150 million. Then there's going to be a special distribution of anything over that amount. I think that could account for some of the differences in price that we're seeing here, but we'll need more details. We'll get more details as the deal unfolds here. I do have a quote here from Jefferies on the deal, and this comes vis-a-vis Brian Sazi. Our first take, we like this transaction, most importantly from a structure perspective, no incremental debt used, as we believe the market is very sensitive to debt levels in this environment. That's because debt is expensive right now. From a fundamental perspective, we like the assets of UFC and also WWE in a world where linear TV is losing market share to streaming. Thus, live sport content is in high demand. And I think that really encapsulates the environment that we're in right now. You think of live TV, well, you got news and you got sporting events. So that includes us and some of these other events. But beyond that, it looks like there are some licensing deals that are up for renewal here, so those could tilt in favor of the direction of the deal. So we'll have to see what comes of it. I did promise some technical analysis. If we could go back to the Wi-Fi Interactive, here is a chart. This goes back, this is a year-to-date chart, basically trading in the upper end of that range, $80 to $95 a share. Here is a match chart, and really impressive to see the volatility that exploded in this stock after 2018 here. Just this big giant box, and it looks like it's on the cusp of potentially breaking out. So these patterns take a long time to form, but could we see a little cup and handle in here? Well, that would make the break to the upside, if that comes, potentially all the more explosive just based on the length of consolidation here.
Well, of course, because it's a deal that's taking place and we know the dollar figure on the deal, there is kind of a limited upside to it as well at the end of the day. I think this deal, I mean, it had to happen, and Endeavor is probably the best of companies that was suited to make this deal. The elements behind it, of course, you had of course, all of the turmoil around Vince McMahon that had taken place and the allegations of hush money payments that had come to light. And so all of those things considered, Endeavor, no doubt, having the time to do its own due diligence and still deciding to move forward with this. And we'll see exactly how that entity fares on a financial basis.